Hello guys, welcome to another video by Fully Informed Trade, or FI Trade for short. My name is Alex. I just want to go ahead and review the markets, talk about what's going on, and give you some basic ideas on what to anticipate in the short term, near future, and the longer term future as well. Let's go ahead and let's review what happened in the stock markets overall. Dow Jones Industrial Average closed negative 0.32%, S&P 500 negative 0.14%, the Nasdaq Composite was positive 0.17%, Amex Composite was up 0.37%, New York Stock Exchange Composite negative 0.18%, Russell 2000 positive 0.48%, Nasdaq 400 mid cap plus or positive 0.57%, and the S&P 600 small cap was positive 0.19%. Overall, the theme is major blue chip stocks had a negative day overall. The 500 largest companies, which are the S&P 500, negative by 0.14% overall. Technology companies did do better on today's trading session than other industries overall, and the mid caps performed much better than the small cap or the large caps for that matter. Alright, without further ado, let's go ahead and get into the research. Dollar index went ahead and had a minor pullback on today's session. Earlier on, I think it was somewhere around 3 a.m. in the morning, I mentioned that the dollar index had a head and shoulder pattern. Let's go ahead and look right here. We had somewhat of a head and shoulder pattern formed right there, and then you have that head right there, and that pretty much forestalled any movement in the dollar index breaking its former high for the day. We also had a dollar index head and shoulder right here. It was just a minor head and shoulder right here, and right here again, which was also negative, and the fact that we couldn't break above this previous shoulder was also a negative indication as well. So pretty much what happens here is that some people are speculating on Federal Reserve manipulation, causing the value of the dollar to go down, bidding up the price of bonds, causing bond investors to move out of the bond markets, to cause people to put their money elsewhere. That causes the value of the dollar to go down in some way. But overall, that causes people to bid up stocks more as they take that money from the bond market and put it somewhere else more lucrative, I'm guessing. And also the Federal Reserve can do direct manipulation by just buying up dollars or selling dollars in tremendous quantities, causing currency manipulation as well. Just exactly like what China is doing, but on a much grander scale, because we do have the largest or the most well-capitalized central bank in the world. Alright, so we've went over the dollar index, and pretty much at around 10 a.m. onwards and around 8 a.m. onwards, it continues its downwards trend. And pretty much that causes markets to have somewhat of a neutral to positive day. But the stock market, like the Dow Jones Industrial Average, did continue a bit lower. It did have a lower day at the very offset, at the very beginning. If we go ahead and look at the S&P 500 futures contracts, at the beginning of the day, especially at around 10 a.m., it was very negative. Before the markets even opened, we had E-minis being sold off. And because of that, the Dow Jones immediately starts negative right off the bat. And then it finds some consolidating support, and then it starts pushing back up. And if we go ahead and look back, we can see that there was some support right around here, the main one being the 20-day moving average on the longer term charts. But if we go back a bit, let's go ahead and look at the 5-day and zoom out a bit more from the 5-day to see a 10-day. And it's a similar theme here. We have support found right here, and we had support found right here. And pretty much every time the market gets skeptical and they want to sell off, for some weird reason, the markets just happen to have a wonderful day. And everyone has this justifiable reason. And in our case, our justifiable reason is retail stock investors and investors that have or investors in companies that have already reported they've been already disappointed, so they sell their stocks. So we get a minor earnings field pullback, but it's not enough. We need to see, at this point, we need to see the Dow component stocks, some major tech names like Apple. We need to see Amazon. We need to see Boeing. We need to see companies like IBM and Microsoft and companies like that to start reporting earnings, and we need to see, we need a larger market crowd to push this market lower after they sell the hype, and that's going to take a little more time. And once investors start selling the hype, that's when I believe the dollar index will be able to break above its longer term resistance at around $80 and 84 cents or so. So that's what's important, or $81.26 actually. So that's pretty much what's important right now. We need to break that $81.26 level for the markets to continue lower, and that's going to happen as the stock market performs negatively after the earnings field rally has already been done. That will cause the value of the dollar to go back up. Let's go ahead and review some major markets, that being Alcoa. Alcoa reported earnings that did beat expectations. The aluminum maker reported a profit, and the sales for the most recent quarter rose to around 5.7 billion, up from 5.433 billion last year. Analysts who followed Alcoa on average expected the company to turn a profit, excluding one-time items, of 19 cents a share on sales of $5.7 billion. So, give or take, the Alcoa's net earnings, which include extraordinary items, was 258 million, or 24 cents per a share. So pretty much it went up from, it was up by 5 cents than what analysts were anticipating, and it's good news, but it's not, you know, as wonderful as we would manage or think it to be, because pretty much it's already been factored in. I mean, they say, oh, we've grown our revenues by 14%. Well, guess what, guys? Your stock has already appreciated, give or take 20 to 30%. By the time you guys say that you guys report a 14% increase from what analysts were anticipating, it really doesn't matter, because over a year ago, if you grow 14%, and your stock goes up by 20%, it's only going to lead to an earnings field pullback. We got this, a negative indication of trend already placed in. We got a slow stochastic reading breaking below that, and I got ahead to you guys. Not too happy with this. This is just pure hype, and it's going to result in a minor pullback to a major pullback later on. Let's go ahead and review the XAU USDO. We got this longer term 8-year trend line, and it was able to find support. And this is constantly happening. This market constantly tries to find support on this level, but eventually, I feel that this market will break below this major longer term trend line by the end of this week, sometime at the end of this week or the beginning of next week. We have, and the only way to offset that, the only way for this market to the only way to make it so that that doesn't happen in the short term is if this market is able to break the 20-day and the 50-day moving average. Otherwise, there should be no trade done on the gold market. The risk to reward isn't there yet for investors to go ahead and start buying back into gold yet. Same story with silver, except a little worse. Silver found support at around the 50-day moving average, but chances are we're going to break that by the end of the week, or at the end of next week, as earnings start coming through and investors continue to start selling into the hype. You're going to see the dollar market make its comeback, and you're also going to see gold and silver and certain commodities react negatively to that as well. If you look at the one-day chart, you can already see that silver is having somewhat of a minor recovery, but even so, unless the 20-day moving average is broken, I don't see the green lights in buying into silver quite yet. At least not for the short term. Even if you're doing it for the short term, you shouldn't do it until it breaks above that 20-day moving average over the longer term. Let's go ahead and review the bond market. The bond market has done pretty well today. Today's session. If you go ahead and zoom back in a little bit, at around, give or take, 10 a.m. was when it peaked out, and that's pretty much when the stock market sold off. So people were like, hey, bonds go up when stocks fall. Likewise, bonds went up, stocks fell. It cooled down a bit as bond investors speculated that those who went into safety trade might just back out, or they might not do it because the stock market is recovering throughout the day. Let's go ahead and review what happened on the dollar index intraday or the day. And pretty much at around 10 a.m., that's when the dollar also started making its pullback. But we can overall assume that the main reason why the bond market did okay or did great at the very beginning of the day was because at around, give or take, uh, when the markets open at, give or take, 10 a.m. or something like that, or 9:30 a.m. or yeah, 10 a.m. was pretty much when the markets bottomed out. And when the markets bottomed out, that's pretty much when the bond market found its top. And then the bond market acts inverse to the stock market from this point onwards. Let's go ahead and review next. 2 p.m. to around 4 p.m. Bond market goes higher. Let's go ahead and resume what's happening in the S&P futures and the dollar index as well. Dollar index just trades sideways, and the E-mini S&P, it does continue a bit higher, but then it pulls back as well. But when you have major adverse moves in the markets and the dollar isn't really doing much, or if it's pulling back and you see the stock market pulling back at the same time, then the bond market generally reacts by going up in response to that, because you got a green light, you have the value of your dollar going down. That causes the value of bonds to go up for the short term, and you find investors in the stock market fleeing towards bonds or something like that, or that's the future projected assumption based on the futures market, and that too causes the value of the bond market to go up in response to that. And once the stock market stabilizes, the bond market does the very opposite. Let's go ahead and review crude oil. Crude oil went up a bit, but the main reason why it hasn't gone higher was because people assume that there's a lot of inventory in the crude oil market as it is. You have this minor pipe, or this minor issue with the pipe in Alaska, and that's causing supply issues. But as we already know, it's not major enough to cause any short or major adverse movements. It's not going to damage supply by much. We have enough oil in storage, or crude oil, that we can manage the supply, or just import it from other countries. So that is all I pretty much want to go over for today. If you guys want to go ahead and check out the same trading software that I use, please be sure to check above this video if you're on Facebook, or below this video if you're on YouTube. You'll find a link for a free 2-week trial. The charting software is very useful, and I find that many people do benefit by it just because it gives you a basic idea on the strength of a trend, and that adds more to your analysis. Other than that, thanks for watching. Without you guys, I wouldn't be here. Thanks so much. I appreciate you guys watching this video, and I'll see you guys next time.